Welcome, everybody. We're going to have a real nice morning. It's going to be enlightening and edifying. I'm joined by David Hunter. David's with us. David has his handle is David H. Contrarian. David, welcome to TradeGate Hub.
Yeah, hi Dale. Thanks for having me. By the way, the handle is actually
Dave.
Dave H. Contrarian.
Okay, Dave. First of all, before we get into what's happening now, I want to acknowledge some of the great calls you've made. I've interviewed you twice before, and I remember the first time I was going to talk to you, and I'm thinking about, you say you're like an ultimate contrarian, and I look and I go, wow, he's bullish. Most contrarians would be trying to top pick this market. And what made you contrarian after I looked at your numbers and heard your numbers was you were the most bullish guy in the cosmos at that time, because we were here back in April. Let me move this box back here in April, and you were talking 4,700. We were underneath 4,000 at the time. And the other call that was great was because I got bearish in here, and mainly in NASDAQ for this little correction here, and got out. I said, you know what, David's going to be right. I better take my chips when I have them, so you helped me. And the other great call was in Russell. The thing had been going sideways forever. And I'm thinking, God, if the market can't rally with a blow off in NASDAQ and S&Ps, that this Russell that moved sideways from last March would probably break down if we got a correction in the S&Ps and NASDAQ. And I tweeted that, and you came back and said, no, the strength of the market should resolve itself with a breakout to the upside in the Russell 2000. Great calls, David.
Yeah, thanks. In the Russell, I was talking 2,900, and people thought that was nuts. It was a 30% upside, and at that time, everybody's pretty bearish on the Russell because it had gone nowhere all year. And but it just looked like to me a high-level consolidation, and I think 2,900 looks pretty easy from here now.
Yeah. So some excellent calls in the market. And I just want to get into just a little bit of, how things have changed, because initially we were talking 4,700 in the S&Ps. And then the next time you had kind of raised it to like 4,900. And so, I knew I was going to be talking to you this week, and I went to your feed and now see that you're looking for 5,300 in the S&Ps sometime in the first half of next year. Is that correct?
That's correct. Yeah, I think I raised it to 5,000 back in early July when my mid-year letter came out.
That's right.
And then I raised it to 5,300 when my fourth quarter letter came out back in early October. So, and I still acknowledge that may be conservative. So, I think we have it's a blow off. It's a melt up. So it's hard to know how much power there is, but I think we've obviously broken out from the consolidation of September, early October, and it looks like that next leg has begun. I'm getting beat up on Twitter, as you probably know, because I called for a pullback before the real melt up gets going, and I still think that's likely that we might get a 4 or 5%. Maybe as much as a 6% pullback in the S&P.
How about back to prior highs when we do get a correction like that? I mean, this was a big level.
Yeah, that's basically, I think 4,500, 4,450 is probably the downside.
And NASDAQ as well, maybe back to 15.8 or so, which were the highs that we had last fall.
Yeah, I think so. 15.7, 15.8. I think when I did it, it looked, I think from the highs, it was like a 6 or 7% pullback, maybe 6, but not a big thing. It's just, I think I can go back because as you know, in the last 10 trading days, everybody and his brother now is saying Meltup. I mean, when I started,
you get nervous when you have too much company and sentiment is on your side.
Yeah, I was saying Meltup in March of 2020. I called,
Right.
for 4,200 back then and was told I was a nut. I was crazy.
Well,
And
I thought you were aggressive, not crazy. I was thinking of maybe sending you a couple of my lithium tablets to stabilize you a little bit, David. But
yeah,
you
yeah,
know,
you were being nice to me. Most of them weren't as nice.
that Twitter stuff, David. You just shake the dust off your feet.
Oh,
Anyway,
I know.
anyway, that it's like, I've facilitated many chat rooms, and just the kind of the attitude of some people out there. They root for others to be wrong, only to rationalize their inadequacies.
Yeah, the frustrating part is when you've got, I've got 120,000 followers, and when you've got that, you've got all kinds of levels of expertise there. Some
Yeah.
with no knowledge or no expertise, and some with a lot of expertise. But and you've got traders, and you've got investors, and you've got retail, and you've got institutional. The problem really is with the trolls is they're typically short-term traders, and they don't understand a contrarian call is not a trade. It's not saying it's going to happen in the next 3 weeks.
Right.
And so when, and lots of times I'm making calls knowing full
Well,
well that I'll look wrong for a week or two. And they're thinking, every time you say that, it goes the opposite direction. Well, that's the nature of a contrarian.
yeah, you're used to turning points are kind of like battleships. Sometimes it takes a little time for it to turn a battleship around, and momentum to dry up and begin to diverge and all of those things. So I know you're an inflection point type trader, and everyone's wrong about short-term trades, counter trend type of trades. I took one in gold. It worked for a day. Now
Yeah,
gold's,
right.
I'm glad I booked it. But people don't understand. They don't understand partial profits. But I want to get back to your work, because I don't care what some people are saying on Twitter. I brought you on because you have skills. Okay, so what I'd like to know is, while you were going through this process of higher highs in the S&P becoming the ultimate objective, as the Meltup is. In fact, when I was praying yesterday, David, I said, God, you know where the high is. I didn't ask him where it was, but he knows, right? I mean,
Right.
he knows, and we attempt with different tools. So I'm curious as to, is it because the Fed has not been moving as quickly as, say, you thought 6 months ago? Because I know you feel this is going to be a Fed type accident. Would it be similar to what they did in 1937, when we were coming out of the Great Depression, and they thought we were in a recovery, and they started to tighten, and that took us back into a bear market that we didn't come out of until World War II?
So are you questioning the bust call?
I'm questioning. Yeah, I'm wondering what it is that tells you to continually move up your targets as they are achieved. Is there an art to it? Is there a science to it? Is it because the Fed, maybe originally, you thought the Fed may have started to do what they're doing now earlier, and they dragged their feet? Is
Yeah,
that the case?
it's a number of things. It's one, as I say, these are cycle calls. They're,
Yeah.
I'm calling the end of a cycle. I'm calling where I think the top is in a cycle, not where the top is at the end of some particular year, not where
Okay.
the market's going in the next 6 months. So obviously a cycle can go as long as the central banks allow it to go. And so nobody knows, nobody knew back in March of 2020 that we'd still be in an upcycle,
Right.
18 months, 19 months later. So,
Okay.
that part I just kind of go as
What
it
was
shows
it?
me that there's room.
Okay. What was it specifically and you held that 4,700 target? It was a great call, the best S&P call of the year. Even Uber Bulls on CNBC didn't join you until much later, like a Tom Lee saying 4,600. So what was it when we were approaching 4,700 that told you we're going much higher than this. What told you that?
A lot of it was, I talked about cross markets. A lot
Yeah.
of it was looking at underlying stocks, underlying sectors, and
Okay.
they had very broad consolidations that told me there was plenty of upside.
Okay.
And quite honestly, even right now, I look at things like the industrials, XLI or
Right.
XLB, the materials, and it's part of the reason why I pushed out from saying we could see the bust, when the data could start by the end of 2021. And now I'm saying the bust may not start till middle of the year. And
Right.
people say, well, you got that wrong. And I go, no, it's just cycles go as long as there's still not excesses to
Oh,
stop them.
trading is a process, and we're always reassessing everything all the
Right,
time.
right.
And the problem is when people don't listen to the market messages. So the message you were getting was from there's a lot of upside in certain sectors. Taking the other side of the coin, does it bother you that stocks like Apple and Amazon and a lot of the FANGs with the NASDAQ 100 taking out prior highs by 700 points are not confirming by making new highs here?
Yeah, I think it's going to be a matter of time. Obviously, Netflix has, of the FANGs, Netflix has kind of been
Right.
up there. Facebook got its own beating because of what was going on in Washington. But they all, when I step back and look, they all look like Amazon, for example, and I'm not supposed to talk individual stocks, but to
Okay.
me, that looks like a broad consolidation of which it's going to, exit on the upside at some point.
Okay.
Doesn't mean it's not going to get hit here in the pullback
Right.
a bit. But I think, you look across the FANGs, and to me, they are going to continue to lead into the top. They're just going through they had a nice move and they're consolidating that move.
Okay. So you really believe, like, guys like Ray Dalio say that the taper will stop. Peter Bookvar says the Fed is not data dependent, they're S&P dependent. And a lot of people think that they won't even finish the taper before they reverse. You really believe, and who knows, do we know who the Fed chairman's going to be? And do you really believe that they're going to go from tapering and that market forces like the inflation problem is really going to force their hand to start tightening next year?
Yeah, I do. And again, I could push this out further, but at this point, I'm thinking we'll see a melt up into a top in the first quarter. And that means and I think we'll be probably looking at a 2% 10-year
I was going to
uh,
ask you that. That's my target
at the
by year
top.
end.
Yeah, at
Oh,
the top. So,
okay.
or maybe, maybe it'll be above that. But I'm
Yeah.
calling for 250, 260 on the 10-year in the tightening cycle. And
Okay.
and so I'm guessing we'll probably see the indexes top out before we get to the top in the interest rates, right? I mean,
Okay.
the interest rates are going to push things down once they get above a certain level. So I'd say, and this is just a total guess, but I'd say you can expect probably a 2% 10-year to correspond with the top in the indexes.
Okay.
And then obviously rates will continue on beyond that because the Fed's going to be dealing with inflation. And I think you will be one of the people that agrees with me when people push back and say, well, the Fed, how about the Fed doing, yield curve control, et cetera. And I go, they're not in charge of rates. Once inflation gets to a certain point, the bond
So
vigilantes take over, the
yeah,
bond
see,
market takes
it
over.
takes dinosaurs like you and I to remember things like bond vigilantes because we've been in a 30-year,
40 year.
40-year bull market. 40?
Yep. Yep.
Okay, so all right, so I think we've got the picture and the narrative in the S&Ps. You've made a pretty bold call in face of what's happening with energy crises in Europe and crude getting up to $85, and you're saying that you're seeing that we may have peaked. Oil may have peaked in this cycle. So you want to talk about that a little bit? I put the crude chart up there.
Sure. Yeah, I pretty much got off the run in the mid 70s. So I said it can go to the
Yeah.
mid 70s, which to me was 75, 76, 77,
Yeah.
somewhere in there. and I got
Which it
off,
did, and then
which it
came
did,
off.
and then it
Yeah.
came off, and then it went again, went to 85, and up in the mid 80s, I pretty much said everybody and his brother is now leaping frog, playing leapfrog against every pundit, trying to have a higher oil price target. We're going to 90, we're going to 100, we're going to 120. And and everybody was a believer in oil where they hadn't been for most of the 18 months. So it just sentiment wise told me everything's in the market at this point. And, they all basically had, certainly I saw it on my Twitter feed, nobody could make a case for
People
the
were
oil
mad
to
at you
fall.
again. People are always mad at you, David,
Yeah, they are.
because
Yeah,
huh?
it's a contrarian's plight.
Are you married?
Yeah, my wife's mad at me,
Oh, that's what I mean. So I wanted to ask you because I knew you probably had practice, and that's why you could handle it on Twitter.
Right.
They get mad.
Right,
So
right.
anyway,
my kids are mad at me. It's
and I'm not going to take it anymore. Anyway,
right. Yeah, that's exactly right.
You don't go. People should know they shouldn't go to you for agreement, right?
Yeah,
All right.
don't look to me to agree with you. Exactly.
Yeah.
So
All right.
so anyway, it's really a sentiment partially, but it's also fundamental in that I think it's unrealistic to not understand that there will be a reaction at some point in terms of supply. You bring prices up from 10 and actually from zero negative to 85, the oil companies are going to increase production. The OPEC will at some point say, they're not stupid. They know that they can destroy demand if they don't react at some point. So I think it's naive to play the momentum game when everybody's in there.
Okay. So, I know I've been playing the short side for weeks, and, it gives it to you and it takes it away. And I'm thinking because of your S&P call, and they are closely correlated, could we have like a pullback in energy, say to 76, 72 in here, David? And while the S&Ps are going up, it could retest the high, maybe even take out the high during the process. That this could end up being, a 2-quarter type of phenomena for topping out too, because your objectives long term are sharply lower.
Yeah, I believe, again, because of my global bust call, I believe you'll see oil back down into the 20s. Now, I don't know if that's 25 or 29, but back down there. It's not going to go there until we're in the bust. But once you get a global bust, you're going to see demand fall like a rock. And you will see that, you'll see a pattern like you saw in, 2 years ago when it fell down to
down here when this was actually a negative print down here.
Yep.
And no one believed it all the way up until the last 6 months. And the oil shares, haven't the oil shares underperformed the commodity itself?
They have. And if I see, if you look at OIH, which I know OIH is not as as active, it's the oil service, and that's kind of lagged, but I see a pretty clear head and shoulder top there. XLE not so clear, it went above the head, but it's rolling over. So I think the energy stocks will roll over here.
Okay, so that'd be a sector that you use the Meltup type of move to be selling into and raising cash.
Yeah, I can't give trading advice. I'm
I know that.
Strategist. You're welcome to come to those conclusions.
But I mean, look at the angle of that rally. I think you're right, Dave. I mean, or I was about the underperformance. I mean, you look at that angle of ascent compared to, what the oil did, and it's night and day. Almost reminds me of how bullion, which is going to be the segue, look at this angle of ascent, and then you look at this angle of ascent, and that's way underperformance. Almost reminds me of how the miners are acting compared to the bullion, which is outperforming. And I know that you've been talking about higher levels, and you people were mad at you on the flash crash. I had you I had you on the air.
Yeah, I remember
and here
that.
was another But now,
that. Yeah, that was right after the overnight flash crash, and
Yeah,
you know,
yeah,
I think you guys thought I was crazy.
yeah, so that, and that was a low. And now we're coming out of this triangle here. So why don't you tell our audience what your targets are in gold?
Yeah, gold, I'm looking for 2,500 at this cycle. So, it doesn't have to top out with the equity market. It could go on for a few months after that. But
Okay.
basically, prior to the bust, I expect to see gold at 2,500.
Okay.
And silver probably 50, maybe even higher, but 50 anyway. Um, so, and then, obviously in the bust, most assets are going to get hit. So, it's a little harder to know what the downside will be after that.
Yeah.
But it could be that they pull back to the levels we're at now. This may be the, kind of the base for the next move.
Interesting. Okay, because I know you even have a narrative for after the bust, but we're not even there yet. So I want to cover things that are going to matter in the meantime. So I do remember that you're not a fan of the dollar. Okay. And the dollar has rallied all year. There were nothing but bears in the dollar here, David, coming into this year. I mean, with the Fed printing and COVID and fiscal stimulus, and again, the best dirty shirt in the laundry, performing pretty good. But now I think we're in a battleground level here between here and 98. Some people are talking 100. But I wanted to ask you, most people, when the bust comes, Dave, they're going to think that everyone's going to run to the dollar and that it's going to get a safe haven bid. I'm thinking the market, strong dollar hasn't bothered the market. That perhaps what's going to happen in the bust is that we get that big sell off the dollar bears have been finally waiting for, and we peak. And there isn't a run to the dollar. It's a run away from any dollar denominated assets. Do you think that's a possibility?
It's certainly possible. That's not my view. I was probably the first one and the most vocal one for a couple of years. I've had this scenario for quite a while in terms of the big picture, that the dollar would be would get a flight to safety trade up to 120, maybe even 140 in the bust.
Okay, but you thought maybe in the 80s first, right?
Yes, yeah, and I have to say, I underestimated this rally. I mean,
So are the 80s off the table?
I don't think so. I think 85 certainly was my original target, and then I lowered it to 80. I think 85 is still very, very much in play. 80's a long ways away, but I think 80 is possible.
So maybe during the Meltup, it would certainly help debt-ridden third world countries to have a bear market in the dollar and take the pressure off those emerging market countries. And normally a weak dollar is going to be risk on, higher metals, higher commodity prices, higher stock prices, at least nominal. I mean, you get a 10-20% hit in the dollar, that could translate into 10% in the market, right?
Yeah, my read of the next 3 to 6 months is that commodity inflation is going to go through the roof, except for oil.
Okay.
So I think copper is going to $6. You're going to see lumber back to 1,000. You're going to see a lot of the metals up, and so I think it's probably that I think is going to turn the dollar down. It's really kind of a story of which is it the chicken or the egg, which comes first or which drives which. But I do think that there's a good chance that we're in the late stages of this dollar rally and it rolls over. And again, look at the sentiment right now. Nobody believes me anymore. Nobody agrees that the dollar can roll over here anymore. So I think we've come up to a pretty good resistance level where it can roll over.
Yeah. Okay. So a dollar rollover, or just something, you're talking about commodities. You could get a break in oil. And during the bust, Dave, I would say the most vulnerable commodity markets would be industrials, right?
Yes.
Okay. So, because, I was around in the late 70s and early 80s during the Volcker era, where we had extremely high rates. And one thing that it did not affect were agricultural commodities. You know, the Fed can tighten and kill copper and kill oil and kill lumber, but they can't print corn and they can't print beans. And I'd say the most resilient during the bust is going to be food.
Yeah, that's certainly possible. Yeah, my story, I think my story is that the next cycle after the bust is a commodity cycle like we've never seen before. It'll make the late 70s, early 80s look like a little thing.
Okay.
I think copper can probably go to $20 plus. Oil can go to 400. Silver can go to 400. Gold can go to 10,000, maybe 20,000. Who knows?
Right.
Agricultural
You're
commodities will go
talking
through the roof.
Weimar Republic in the
Yeah,
US.
not Weimar, but certainly something that looks like the early 80s on steroids, probably.
Okay, Dave. What a great interview. You want to let us in on what the H and Dave H at Dave H Contrarian stands for, or let me make a guess. The H stands for humble.
Some people don't think so. I tell people watch and learn, and they misunderstand when I say watch and learn. I'm really saying watch the markets and learn. They think I'm saying watch me and learn. So people think I'm an ego nut, but I'm really not.
Well, I've interviewed well over 1,000, and I think humble is appropriate. And I respect your work, David. I really appreciate you being with us here today, and I consider you an important part of my intelligence gathering on a macro basis now. So I want to thank you for having a generous spirit and sharing your work and taking the hits from a bunch of morons on Twitter.
Yeah, thanks, Dale. It's a
All
pleasure
right.
to be on. It's nice to be with somebody that's been around as long as I have. So
Yeah. All right. Well, when I tell you what, one day when we get our feet out of the tar pit, like during that last cycle, you and I ought to have a beer in your bomb shelter.
yeah, that would be good.
How's that sound?
That sounds good.
Break bread there. All right. Everyone, David Hunter, and you could follow Dave at Dave H Contrarian on Twitter. Excellent interview, Dave. Can't wait for the future to see what you're thinking in a few months.
Hey, you take care. Have a nice holiday and nice Happy New Year.
Yes, thank you.
Actually, I think I'm going to be seeing you on your other venue in a couple weeks. So.
Oh yeah, okay. Well, I end every show with this, Dave. Don't just count your pips or your bank account, count your blessings. And thank you for being here with us today. And remember this, Dave, only God knows where the top is.
Yeah, I agree with that.
But good guesses. Thank you, David.
Okay, thanks,
David
Dale.
Hunter, everybody. Hope everyone enjoyed it. And that's going to be a wrap. I'll see everyone tomorrow. Good hunting the rest of the day. Adios.